How are we doing, Jeff? Everybody's really quiet and like just lack of expression, except for Tyler. Tyler's got his emote game on, but it's just I think it's where that point in the semester. I'm just curious. Week 14, week 15, is there just going to be a lot more enthusiasm? Like, yes, close to the end of the semester. Just not feeling it yet. Just not feeling the end of the semester yet, and it still kind of seems a long ways away.
I think we're feeling it.
Well, feeling the end of the semester in a bad way. It's more pressure about that. Okay. And so it's a lot of assignments due in Dr. Lingwell's class, and just tired. Okay, that's fair. Yeah, I've heard some stories about allergies. I actually woke up with a sore throat today, which doesn't happen until allergies start happening, and that usually kicks in around April. They're not as bad as they used to be, especially not in Missouri. Like in Oklahoma, they were awful. I told people I was basically useless for the month of April, and then again for the month of September. But I guess all we have to deal with is mold here, not as much pollen. But it still can be pretty ugly. So what do you think of bad blood? Is everybody pretty excited now that Elizabeth's starting to get her comeuppance? Yeah. So starting on chapter 21, there was the big conflict between the lawyers and the Wall Street Journal, and there was this big buildup to this particular thing, and then nothing happened. Basically, the lawyers showed up and they issued some threats, and then when the Wall Street Journal asked questions, they said, trade secrets. Yeah. A lot of stonewalling, a lot of blockading. And so the lawyers just basically said, don't publish this article. You have no information. And the Wall Street Journal says, oh, yes, we do. And kept gathering information. Then moving on to chapter 22. Chapter 22, did anybody catch the title of that one? La Matanza, which I think is a great title for a chapter, even if I had no clue what that actually meant from the context of the chapter. I would just want a chapter about my life to be called La Matanza just because it sounds so cool. But the Sicilian spearfishing ritual. And so I was talking to his editor, and he's trying to push his editor to get this thing published because Elizabeth Holmes is going to be going to the Wall Street Journal Tech Conference here in about 2.5 months. They have to be very, very sure they've got it down. And he's saying, well, we're lying in wait. They're going to basically ignore us and not pay attention to us, and then we're going to spear them like the fish in the Sicilian seas or Sicilian lakes or wherever they're fishing it. Then we went on to chapter 23. Chapter 23 was the fallout. That was basically where the journal was published, and then all of a sudden, Theranos went from being everybody's media darling to like, hey, you know what? Maybe they don't have all this technology worked out. And there's actually some clips that you can find of the interview that Elizabeth Holmes did with Joe Kramer. I think that's his name, Michael Kramer, whatever his name is. What's the guy on Mad Money? Apparently I'm asking the wrong audience. His last name's Kramer, but he's the head of TV show Mad Money. What's that? Jim Kramer, that's it. I knew. Okay. Jim Kramer. I knew it was in the right ballpark. And so I was about to go old Seinfeld and say Cosmo Kramer, but Jim Kramer, and you can actually see the clips of Elizabeth interviewed there for that particular fallout. And she was pretty rattled. There's also, if you really look for it, you can actually find Elizabeth Holmes' TED Talk. TED no longer actually has it on their website, believe it or not. I guess they kind of said, oh, this is bad for our image, so they can't find it. But there are people who kind of put secondhand recordings of it up there, so you can find that. And so, saying this is just a smear campaign and we're going to change the world. And then there was a whole bunch of articles that followed afterwards. But she went to the Wall Street Journal symposium, and she tried to defend. She basically put a whole lot of defense up there, but everybody started to question it now. And so kind of the climax is coming up. We got the chapter 24 where all everything's going to come up, and that's going to be the interesting until this. So we got that to look forward to next week. Unless, of course, you've already read ahead and read the entire book, then you know what's going to happen. But, that's something some of my students last semester admitted to, or last year they admitted to. They said they got about halfway through the book and said, I was kind of interested. It's actually a pretty good book. And then they read the whole thing. So I have to remind themselves. Has anybody finished the book yet? Okay. Is Dr. Barnes making us read more than we actually have to? What kind of time? Do you think we have spare time? We have no free time. We're Mac students. That's fair. All right. Short, sweet CPA prep questions today. Let's go ahead and get at it so we can get on to bigger and brighter things. I want to say bigger and better things, but are there really better things than CPA prep questions? Let's be honest. Let's be honest. You're going to say, yes, there's definitely better things in CPA prep questions. And I said, then why do you spend so much time doing them? Yeah. Yeah. Makes you think. Makes you think. All right. Question number one. Which of the following is true in comparing the compilation engagement for a review or for comparing a compilation engagement and a review engagement for a non-issuer? So this is a really important question. Let's go ahead and let's talk very quickly about the types of engagements, understatements on standards for attestation or review services, or SSARS. We talked about this in 417. It's important for remember for context. 3 types of engagements: preparations, compilations, reviews. All right. Preparation is not listed here, but let's talk about it anyway. So in a preparation, we're basically just preparing information on a specified reporting framework, okay, whether that's GAAP or some other basis of reporting. There is no report issued, there is no opinion provided, and the preparer, the CPA, is not required to be independent, which is an important distinction to make. Now we have compilation, which is a little bit more detailed because compilation is basically doing the same thing as a preparation, but it's also based on the representations made by management, which implies that there's certain estimates or judgments to be made that are inherent in there. Now, in a compilation, there is going to be a report issued. Okay, there's going to be a report issued, but there is no opinion rendered. Okay. Now, I do want to make a point about that because the CPA exam tends to ask this question in kind of really, really weird terms. When they talk about whether a report issued, they call that an attest function. If they issue a report, that's called an attest function. If they issue an opinion, that's called the assurance. Okay, so attest is provided, but assurance is not in a compilation. Also, independence is not required in a compilation, but there's a big caveat to that. In a compilation, if you're not independent, as a CPA, you have to disclose that in your report. Okay. Now, review is the review of financial statements. It's basically less in scope than an audit, but still more in scope than the other types of engagements. A review of financial statements does require a report and requires an opinion, and it requires independence on the part of the CPA. All right. So let's go ahead and go through that now that we know that. The compilation, only limited assurance is provided. How much assurance is provided in the compilation, folks? Is it less than limited? It is significantly less than limited. It is no assurance. So we can already eliminate A. Both compilations and reviews provide some sort of assurance based on what we just talked about. That's not true either. Okay. Compilations provide no assurance. Both compilations or reviews require establishment of understanding of the client. What do you guys think about that one? That doesn't actually specify an assurance. It just basically says that we need to know what the nature of the engagement is going to be, which sounds reasonable and correct, and that's true. Negative assurance is separation in a compilation, but not a review. If we transposed it, say negative assurance is provided in a review, but not in a compilation, that would be a correct statement. Limited assurance is provided in a review, which we refer to as negative assurance. And remember, when we talk about negative assurance, that's saying we do not believe any material modifications are necessary. A little bit less strenuous than positive assurance. Which of the following engagements is considered a non-attest engagement? When we talk about non-attest engagement, what are we saying? We're saying an engagement where a report is not rendered. Okay, there's no rendering of report, not something that's not an attestation engagement. That's not what we're talking about. They're talking about in this context something a report is not rendered, which was the only one of these 4 items where we said their report is not issued. That's a preparation. We just talked about that a few seconds ago. Okay. For issuing a report of the compilation of financial statements of a non-issuer, the accountant should do what? All right. Compilation, keep in mind the characteristics of compilation. Apply analytical procedures, select the financial data, discover any material misstatements. Are we providing any assurance in a compilation? No, so we're not going to perform testing procedures. Okay, analytical procedures imply testing procedures to apply to gain assurance. There's no testing performed in a compilation, so that's not going to be correct. B, corroborate at least a sample of the assertions management is embodied in the financial statements. Again, that implies assurance. We're not gaining any assurance in a compilation. C, inquire of the client's personnel as to whether the financial statements admit substantial out disclosures. Again, sounds like procedure, sounds like testing. We don't do that in a compilation. Proceeds with D, read the financial statements to consider whether the financial statements are free from obvious material errors. It's the only one that doesn't really imply any assurance, and that's the one that we're going to go with, is D. An accountant has been engaged to compile the financial statements of a non-public entity. These financial statements contain many departures from GAAP from the inadequacies in accounting records. The accountant believes the modification of the compilation report is not adequate to indicate the deficiencies. Under these circumstances, the accountant should do what? So we know that there's going to be a report rendered, but there's not really any guidelines for how we can modify a report under compilations or under statements on standards for accounting and review services. Also, it's important to note we do not render an opinion under compilations. So what is our criteria? If we believe that there's problems in the financial statements and it's not, we can't modify the report sufficiently to actually express the scope of these modifications, what is basically our only option is the CPA in that situation? Basically bounce. Yeah, that was a much better term than the one I was going to use. I was going to say leave, but I like bounce a lot more. We're going to bounce, okay? And so, yeah, we're going to basically withdraw the engagement, provide no further service concerning the financial statements. It's the only rational course of action given the limitations that were specified in part or in the question. Performing inquiry and analytical procedures is the primary basis for an account issue. So I want you to note this. This is really important. So when you start studying for this, you're going to notice that one of the areas they focus on with respect to reviews is how they differ, or how they are the same and how they differ from an audit. One of the similarities of a review with respect to audit is they perform limited testing, and those two types of tests they perform in a review are specifically inquiries and analytical procedures. Okay. So we know that these are characteristics of reviews, and so that's probably what we're looking for in this particular answer, okay? So the thing is that we've actually got two reviews here. We got two reviews, a review report of financial statements, or a review report comparative financial statements, okay? Now, we're specifically talking about statements on standards for accounting and review services in this context. When we talk about inquiry and analytical procedures, this is talking about reviews as they would be under SSAE, statements on standards for attestation engagements, okay? We have talked about that already. That was a previous section. That's not applicable to the inquiry and analytical procedures we're doing here, where we're doing a review over the procedures. So a review of the financial statements. So D is going to be our answer just because we're talking about SSARS and SSAEs. Which of the following procedures should an accountant perform during engagement to review the financial statements of a non-issuer? Okay, so we already know a little bit about this, but let's just go ahead and go through, okay? Communicate significant deficiencies discovered in the assessment of control risk. In a review, do we assess control risk? That's probably a good question to ask. So like, I don't know the answer to this question, Dr. Barnes, but I probably should find out the question. So let me see. What would Dr. Barnes ask if he were here right now? And I'm assuming that this is a question you're asking yourself when you're at home studying for this on your own and not asking this question right here, because I am here, right? But what would Dr. Barnes ask? Is control assessed during a review? And the answer is no, control is not assessed as part of a review. Would he obtain a client representation letter from members of management? Probably seems pretty good to actually make sure that we understand what information is provided by management. So B is a possible answer, but let's go through the rest. Sending bank confirmations to the entity's financial institutions. We just talked about the two types of testing that's performed as part of a review under SSARS. Was confirmation one of those types of testing? It was not. Confirmations are not available under a review testing, okay? Examining cash disbursements subsequent period for unreported liabilities. So we're talking about doing a search of cash disbursements, doing testing of cash disbursements. Is that one of the types of tests that we talked about? No, again, remember we were looking at inquiry and the analytical procedures only. Those are the only types of tests we perform in a review. C and D represent different types of testing procedures, so we can't perform those. So B is our answer. In reviewing the standards, the financial statements of the non-issuer, in accordance with statements on standards for accounting and review services, an accountant is required to modify standard review report for the issues of the following matters, okay? So generally speaking, we talk about areas that they can modify the standard review reports. There are criteria for modification of the standard review report, and they are limited to two general areas. Okay. Generally speaking, we can modify the review report if we believe there's substantial doubt about the entity's ability to continue as a going concern, or if we believe that there's a material departure from GAAP. Okay, or yes, at least material departure from GAAP. So let's look at each of these. Inability to assess the risk of material misstatement due to fraud. What does that sound like to you all? As people who have taken now 2 audit courses, when you see the inability to do something, you should automatically think what 2 words? Scope limitation, scope limitation. We didn't talk about the nature of scope limitation and modification of reports, so that's not going to be one that we can actually modify the report. In that situation, if we were unable to assess the risk of material misstatement due to fraud, well, first of all, we're probably not assessing that anyway as part of a review report, simply because that's not something that's part of a review report. But inability to do anything would result in withdrawal of engagement if it was relevant to the review. So inability to assess the scope limitation, and even then, we're not really concerned about the risk of material misstatement due to fraud. That's not part of the scope of the review report. So wrong on 2 dimensions. Discovery of significant deficiency in the design of entities' internal control. Going back to the previous question, how much responsibility do we have for control in a review process, in a review of financial statements? No responsibility for controls, okay? So the answer is no and no, which means we're gonna have D. All right. This was similar to a task-based simulation that I had in a previous question that I had to adjust. Fortunately, this one is pretty straightforward because if you actually go through the blueprint for attested insurance report analysis on Brightspace, you answer these questions. I was trying to get this to challenge a little bit, see if you can reinforce some of the concepts that we've talked about with respect to reviews. But if you did go to that, you should be able to find the exact wording that you need in every single situation. Okay. So let's go ahead and go through here. So we have reviewed the accompanying balance sheet of Tucker Company as of December 31st, year one of the related statements of income, retained earnings, cash flow of the year ended. A review includes primarily blank, management's financial data and making inquiries of the company's management. So you probably could go to the report and just look this up, but we've got one type of evidence collection here. It talks about inquiries. What was the other type of evidence we talked about with respect to reviews? Analytical procedures, yes. So this is going to be applying analytical procedures is what the exact word is. Okay. Applying analytical procedures. Moving down here. Managers responsible for the, okay, this is actually something we've talked about with respect to auditing, but if you wanted to look up the words. So they're responsible for something of the financial statements. Are they responsible for preparation of financial statements? In a review, yes, okay. What about fair presentation of financial statements? Also in review. Preparation and fair presentation of financial statements. Then a little bit further down, even though we don't test it, we're going to actually talk about something with respect to control. What are the three criteria that a management always applies to with respect to control as they relate to financial reporting? So, by the way, Becker has an acronym for this, okay? It's called Mr. DIM, M-R-D-I-M, Mr. DIM. It says management's responsible for design, implementation, and maintenance of internal control. All right. Now that's a somewhat dubious acronym, but if you struggle in this area, you can think Mr. DIM, Mr. DIM. Dr. Barnes taught me that. He's Mr. Dim. Yes. Anybody calls me Mr. Dim and I find out about it. Yeah. All right. Our responsibility is to, okay, so what are we doing here? We're talking about a particular type of engagement here. So gain reasonable assurance. Is that what we're doing here? No, it's a review engagement. So we're actually going to say conduct the review engagements in accordance with what are the standards that we're actually talking about with this particular situation. So we're talking about a review of financial statements, which falls under a very specific set of criteria. Statements on standards for accounting and review services, SSARS, SARS, yes, okay. These standards require us to perform procedures to obtain reasonable assurance, correct? No, we can't obtain reasonable assurance in this type of engagement. This is one of those negative assurance, or what's another term for negative assurance? Limited assurance, yes. All right. The account's conclusion, based on our review, we are not aware of any material modifications should be made to the company financial statements. Now, this is not a part of this question, but I want to make sure everybody notes this. When you see that terminology, you should automatically think negative or limited assurance. That's the wording that's used for limited assurance engagements. Okay. We are not aware of any material modifications that should be made. The company financial statements for them to be conformed with what are something that are generally accepted in the United States of America? What are those financial standards? Accounting principles. So you like how they transpose those accounting principles, except so it's APGA, not GAAP, but APGA. Yeah. So generally accepted accounting principles, but these are accounting principles generally accepted in the United States. That's it. Short and sweet. Anything anybody wants to share? Any stories? We got like 16 minutes here. We just want to call it good here. I know Dylan wants a nap, so maybe I can get him a short one. All right. Have a good weekend.